feeling like your money just doesn't go as far as it used to. That's inflation at work, and it's a real challenge for all of us. Simply put, inflation is when the prices of goods and services rise over time, which means your dollar buys less than it did before. Think about how the price of your weekly groceries or a tank of gas has changed in the last year. That's your purchasing power shrinking. It can feel a little scary, but the good news is you're not powerless. By understanding how it works, you can take smart, proactive steps to protect your finances and even come out ahead. So let's dive into some practical strategies to help you manage inflation like a pro and keep your financial future secure. First things first, let's talk about the foundation of financial control: budgeting. I know the word budget can sound restrictive, but think of it as a roadmap for your money. It's about being intentional with your spending, not about depriving yourself. Start by tracking every single dollar you spend for a month. Cool. You can use an app, a spreadsheet, or just a simple notebook. You'll probably be surprised where your money is actually going. Once you have a clear picture, categorize your expenses into needs and wants. Needs are essentials like housing, utilities, groceries, and transportation. Wants are everything else like dining out, entertainment, and subscriptions. During periods of high inflation, it's crucial to prioritize your needs. This doesn't mean you have to cut out all the fun, but it might mean making conscious choices. For example, maybe you swap a few dinners out for a home-cooked meal, or you pause a streaming service you barely use. The goal is to create a spending plan that aligns with your values and ensures your essential costs are covered, giving you peace of mind. Now, let's get into the exciting part: making your money work for you through investing. Just letting your cash sit in a standard savings account during high inflation is like running on a treadmill and slowly being pushed backward. The interest you earn is often much lower than the rate of inflation, meaning your money is losing value over time. So, where should you put it? Historically, certain assets have performed well during inflationary periods. Stocks, for instance, represent ownership in companies. As companies raise their prices to cope with inflation, their revenues and profits can also increase, which can drive their stock prices up. Investing in a diversified portfolio of stocks, perhaps through low-cost index funds or ETFs, can be a powerful way to grow your wealth faster than inflation. Real estate is another classic inflation hedge. As prices go up, so do property values and rental income. Of course, all investments come with risk, and it's important to do your own research or consult with a financial advisor to find a strategy that fits your personal risk tolerance and long-term goals. The key takeaway is to not let your money stagnate. Get it invested so it has a fighting chance to outpace rising prices. Let's switch gears and talk about debt, because how you manage it during inflation is incredibly important. Debt isn't always a bad thing, but it's crucial to understand how inflation affects it. We need to look at two main types of interest rates: fixed and variable. If you have debt with a fixed interest rate, like most mortgages or federal student loans, inflation can actually be your friend. Here, that's why. You're repaying back the loan with future dollars that are worth less than the dollars you originally borrowed. Your payment stays the same, but as your income potentially rises with inflation, that fixed payment becomes a smaller percentage of your overall budget. On the other hand, be very cautious with variable debt, like credit cards or some personal loans. When inflation is high, central banks often raise interest rates to cool down the economy. This means the interest rate on your variable debt can shoot up, making your monthly payments much more expensive. So, a smart move is to prioritize paying down any high interest, variable rate debt as quickly as possible. This will free up your cash flow and protect you from unexpected payment shocks down the line. So, let's wrap it all up. Facing inflation can feel overwhelming, but remember, you have the power to protect your financial well-being. It all comes down to taking proactive steps. First, get a grip on your spending with a clear and realistic budget, making sure your essential needs are always covered. Second, don't let your savings lose value sitting in cash. Explore investment options like stocks or real estate that have the potential to grow your money faster than inflation. Third, be strategic with your debt. Take advantage of low fixed rates and aggressively pay down any high-interest variable rate loans. By combining these strategies, budgeting, investing, and smart debt management, you're not just surviving inflation, you're building a resilient financial foundation for the future. You returning a challenge into an opportunity to become a more savvy and confident manager of your own money. Thanks so much for watching. If you found this helpful, be sure to like, subscribe, and hit that notification bell for more tips on mastering your finances. See you in the next video.